Hi, how are you? Okay, we can see you now. Welcome to DEFIICON. Do you have a slide deck that you're going to be covering?
Yeah, I think I can share the screens.
Okay, great. There's a little icon on the bottom with the up arrow. You can use that. I want to welcome you to the conference. Very excited to hear about dForce. The way we like to get started, one is if you could talk a little bit about yourself and your relationship with dForce and how that started, and then we'd love to get this dForce overview presentation going. So welcome, and let's get started.
Okay, let me.
You see the share screen? Yep. Yeah. Should be an icon on the bottom.
Can you see that?
Not yet. Maybe it'll take a few seconds. Oh, here we go. It's coming up.
Okay.
Yeah.
Okay. Hi everyone. This is Mindao from dForce. Actually, before I do this sharings, I think thank you for DeFi icon for the invitation. And I would give a brief intro about myself. I'm a founder of dForce. I actually joined crypto quite early. I joined the crypto space in around 2013. At the time, it's mainly just trading Bitcoins, arbitrage, and also doing a bit of mining. And at the time, I was still working as a professional in the private equity industry. I both working at international private equity firms like Standard Chartered Private Equity, and also working at one of the largest private equity firms in China. So my background is actually from traditional finance, mainly in investment side and distressed investment, buyouts. At the time, I actually, in addition to just Bitcoin mining, I also participated in the Ethereum ICO back in 2014. And also the very first early members of the Ethereum local community in China. We formed the cores of the Ethereum communities in 2014, and I think that also in addition to the Ethereum investment, also invested in a dozen projects, including Filecoin, Cosmos, etc. And I founded dForce at around early 2019. It is one of the earliest DeFi projects in China, and now it's one of the largest DeFi projects coming out from China in terms of total log value. And we also invested by China Merchants Bank International, which is the fourth largest commercial bank in China. I think it's probably one of the only sort of DeFi project invested by a commercial bank globally. And we're also backed by Multicoin Capital, which is a leading crypto fund in the US, and also Huobi Capital, which is one of the largest crypto exchanges in China. And actually, dForce is we're building out a protocol on Ethereum. Actually, we're launching our first protocol back in 2019, which is a US DEX. It's a lending is one of a stablecoin protocol, and then I expanded to do lending, and also now we also have trading aggregators. So basically, I think the differences comparing dForce with the other DeFi protocol is that we're basically building DeFi horizontally, including different verticals. It's not just building one vertical. And I would give a more sort of background information on the products at the later of the presentation. I think that before I started to talk about more dForce, I think that it's important to understand DeFi in perspective, because I joined the industry in 2013. I think that at the time, DeFi is actually not a concept that has been going. I think DeFi is coming around as a concept probably at the second half of 2018. But actually, the DeFi implementation started quite early. In 2013, I remember the time before Vitalik started Ethereum. I think he's in the project called Colorcoin, which is a attempt to build sort of financial application using Bitcoin blockchain, and we all know that it didn't work out. And also, BigShare is the effort. It's the very earliest of DeFi experimentation led by BM, which later started EOS. So we can see that if you actually look at DeFi sort of movement in vintages, right? We see that 2013 and 2015 is very sort of early experiment, and very little projects, very few projects doing in the space. There was a big vintage. It's 2017. We see the bank called Etherland, which is rebranded to Avi now. Chainlink, MakerDAO, DYDX, and all these big sort of Western DeFi projects, and also DDDEX and Loopling started in 2017. These two of the DeFi projects coming out from China. I think the 2017 vintages are some of the pretty good DeFi projects we can see today actually started in 2017. In 2018, 2019 is a big vintage, right? We see all these big sort of protocols, Compound, Uniswap, Synthetics, including dForce. We also coming out from the 2018, 2019 vintage. And 2020, of course, some of the new sort of emergent community-run project coming out. So I think that the space is really booming, and we can look at also the log value as well. When we started our first sort of lending protocol attempt early last year, I think the log value is around less than $1 billion. Now it's more than 40 billion. I'm talking about a true log value, not the actually taking out some of the double counting values. So it's almost like 40x growth in terms of log value. And long outstanding, we look across the lending protocols, is also 20x, more than 20x growth in terms of the long outstanding, and also the BTC ERC wrap tokens on Ethereum, it's also growing. It's almost 100 times. So it's substantial growth over the past year. There's a lot of BTC issue on Ethereum, which become a basic sort of collateral of all the DeFi protocols. And DEX volume, of course, is growing from 22 million in early March last year to now like $500 million. So it's almost like 25x growth. And stablecoin, of course, is cornerstones of Lego of DeFi. Is also growing substantially. Not just the total sort of issuance of stablecoins, but also of the variety of offering of stablecoin. We can see that some regulated stablecoin, algorithmic stablecoin, and also some of the over-collateral stablecoin all coming out over the last year. So I think this is also a very strong indication of the growth of the industry, and DEX transaction of course is correlated to the volume as well. So I think that if you look at the matrix I just show, I think there's several takeaways I'd like to share. One is that DeFi, we can see over the past year, the phenomenon sort of increase in growth. I think one of the leading contribution is coming from the composability. The first thing is that we look at the log values. Basically, you take out those sort of the double count log value. I think over 30% of those total log values are some of the double wrapping tokens, which means that different yield tokens wrap over one another and then compose into different yield tokens. So I think that these are some of the sort of composability that play into the DeFi stacks. I think that the sort of features that we can wrap one token into the other token is actually making it super easy for us to iterate products and expand the network effects. And we can see how some of the products can grow just from a couple of $1 million to $100 million to $1 billion log value, probably just over the span of 1 to 2 months because of the composability and easy to actually wrap in tokens into different sort of protocols. And of course, protocol mingling is also quite a significant sort of phenomenon. We can see that, for example, like Curve token, there's a lot of yield token pool on Curve, which is a stablecoin swap protocol. And basically, when you supply those liquidity into the yield token pools, it will be supplied into the underlying lending protocol. We are now proposing to add our yield token from a lending protocol to Curve as well. So in a sense, I think every protocol doesn't exist idle, right? It's not like independence of the protocol. It's all mingling with each other. And the other example is like a SUSI staking token. is accepted into the CRIM as a lending collateral, and you can earn staking yield as well as earning the lending interest as a collateral supplied to the lending protocol. So I think that the protocol mingling has become pretty much a sort of standard practices between all these asset protocols. And the end result is that this huge improvement on the capital efficiency. Basically, you can use the capital liquidity as a liquidity, as a lending collateral, as well as trading assets. So you can earn not just LP token trading fees, market lending yields, and also mining rewards. It's a huge improvement on the capital efficiency, including that you can also earn the staking yields as a collateral that's applied to the protocols. So if you actually look at the major sort of category of major protocol primitives, the status quo is that basically the three vertical category of protocols. One is the asset protocol, which is serve as a base layer for the whole DeFi Lego. The majority of them are from stablecoins, regulated, over-collateralized, and also synthetic stablecoins. And the second largest stack category is the BTC wrappers, WBTC, RBTC, and HBTC, which are three of the dominant ones, and commodities, and also the other algorithmic stablecoins. So I think the asset protocol serves as a very base layer for the DeFi Legos. And on top of that, we have liquidity protocol like trading, like AMM, and also order book, and also aggregators like 1inch. They just did a presentation, and also including we also doing an aggregator on trading as well. So I think the liquidity is more for exchanging one token to the other, and using different methods to do that. And of course, the last one is the lending protocol, compound RV and dForce lending. We are on this category. So I think that the status quo is that we have three categories, and the new DeFi primitive we can see that emerging from the last year are some, for example, on the asset protocol layers, it's not just permissionless stablecoins. We will see that CBDC, which is central bank issued digital currency, it is coming out in China. We already have experimenting CBDC in China in different cities. We're expecting to have full launch. I think that we will be expecting full launch probably later this year. This is a permissioned network issued stablecoin. And of course, Libra is also a federated chain stablecoin. So I think that in this category, we'll see new DeFi primitive emerging from permission networks. And of course, NFT is pretty popular nowadays, cash flow based assets, real estate, commodity, etc. I think that this will be coming as a very major sort of collateral into DeFi protocol. I would expect him to, onboarding this NFT into the lending protocol over the next 12 to 18 months, and including that, we also experimenting some of the use cases in this area. And bond and stock, we can see a lot of efforts to actually tokenize bonds, U.S. Treasury bonds, stocks. We already see synthetics. And also Luna is tokenized Tesla, Apple stocks using the synthetic method. And we also will be landing our own sort of synthetic asset platform very shortly. So I think this sort of new primitive is building on onboarding new assets. We will be seeing a lot of these in the coming year. And liquidity protocol, in addition to the AMM we see in the markets now, we can see a lot of customized AMM, which using different algorithms to optimize the capital efficiency. We can see a lot of these efforts already being implemented, including Banker V2, V3, and also Doodoo is one of the new sort of AMM experiments. And we are also working on a yield-bearing AMM, which means that all the liquidity supplied to the AMM will be automatically supplied to our lending protocol to earn yields. So instead of like you are a LP in Uniswap where you just put in all your capital sitting idle, earning nothing, your capital will be earning interest when they are doing no tradings. So I think these will be some very cool experiment. But unfortunately, I think because of the gas cost on Ethereum, it's difficult to do that. So probably will be deploying this on the other layer 2 solutions like maybe Binance Smart Chain to experiment this out. And lending protocol, of course, we can see a lot of tranche loans emerging, tranche loan protocols emerging, where they will be providing fixed terms and fixed rate loans, and also separating the subordinated investor and senior investors. I think that we will be seeing a lot of interesting sort of segments in the lending protocol space as well. So now talk about dForce. And as I discussed earlier, what's the difference of dForce comparing with the other DeFi protocols is because we actually believe that DeFi is basically sitting in the middle layer of the whole sort of user interface. I call it like front shop, back factory model. So the front shop is the consumer facing layer like CeFi, wallets, centralized services. And DeFi is basically serving as a backbone and fundamental layer of the whole open finance infrastructure, and it provides a pool of capital and assets that's accessible to all these upper layers of applications. So I think that the model that we build is trying to connect these three categories of protocols, and I think that that's what's happening in the market as well. We can see that Curve, Compound, Aave, and all these protocols interoperable with one another. But I think the difference is they all just doing this independently with their own sort of platform tokens or governance tokens. What we're trying to do is that our dForce token is going to be used across asset protocols, liquidity protocols, and lending protocols within our protocol matrix. So in terms of the asset protocol, we already launched our synthetic stablecoins back in late 2019. We have our yield markets, which is pretty much like a aggregator in terms of the stablecoin supply yields. And also we have our multi-currency stable debt, which is a synthetic asset protocol. So on the asset protocol layers, we have different category of protocols. And in terms of liquidity protocol, the first one we launched is the trade aggregator. It's similar to 1inch, but we are doing it both on Ethereum and Binance Smart Chain. And we'll be launching our own AMM with interest-bearing capability pretty shortly. So the liquidity pool and the asset protocol is connecting with one another. I will explain it later on. Lending, we just launched the dForce Lending, which is also a general lending protocol, plus that it can be used as a platform to synthesize other assets and to mint other asset protocols. So this is a diagram that probably can explain our lending and synthetic asset protocol more clearly. So basically, what we're trying to do, comparing with some of the synthetic protocols in the markets, they actually trying to build synthetic protocol as an independent one. What we're trying to do is that we actually building our synthetic protocol on top of a general lending protocol. You can think of it as a synthetics or MakerDAO built on top of Compound. So that's what we're trying to do. So our lending protocol is very general one, just like Compound and Aave, that you can provide assets there and can borrow the assets out. In the meantime, all the collaterals you supply into the lending protocol can also be used as a collateral to mint other synthetic assets. For example, like stablecoin, different foreign currency of stablecoin, US dollar, Euro, and Chinese yen, and also the other synthetic like BTC, ETH, maybe Tesla stocks and Apple stock as well. And the benefit of that is comparing with MakerDAO model, where all these collaterals are sitting in the CDP idle, is that all the collateral supplied to the lending protocol is earning yield as well. You'll be able to earn interest when you supply those collaterals and mint the other synthetic assets. In addition to that, we also can create separate pools, which is segregated from the lending pools, for example, to accommodate the need for real asset financing, like real estate financing, structured financing, and also pools for fixed rate term loans, and a variety of NFTs, which is not be able to support by a general lending protocol. So I think that is basically connecting lending and the asset protocol together. And you can look at the other sort of product we already launched as the U markets. We already have about close to $70 million lock value in this protocol. Basically, the users can supply stablecoin into our U markets. They can earn yields, and all these stablecoins will be supplied to the underlying lending protocol, including dForce lending, Compound, and RV. Whichever has the best yield, the strategy will optimize for the best risk adjusted rewards. So this is basically also connecting our asset against with our lending protocol, and that's why I say that in all our matrix, each protocol is not independent in itself. It's basically connecting with one another, so that you can basically achieve the greatest sort of capital efficiency, and of course it can accrue most value for the governance tokens. And the other one is some of the commodity commodity tokens and NFTs that we are trying to experiment on, including GoX, which is a gold token. Basically, it's wrapped on top of Paxo Gold. And we actually denominate it in gram, which is more sort of is more widely accepted sort of unit of account in Asian markets, including China. And also we get rid of the transaction fees, basically making more sort of customized and sort of supportive and accommodative into the DeFi protocols. And we are now in the community, we're actually proposing to actually list GoX as a collateral into our platform. So and the other one is the synthetic stablecoins. I don't want to spend too much time talking about that because the time constraint. And this is also how we do the how we use the DeFi sort of interoperability to do our synthetic stablecoins. Yeah. And here we list out some of the investors that we have. I explained earlier. CMBI.
Mindao, you got to share the slide deck again. I think you lost the share. Yeah.
Yeah. Okay. Can you see that?
Not yet.
Okay. Okay, just lost it. Yeah. So here it is. Yeah, so I wouldn't go into too much detail into some of the designs of the other protocols. We have a lot of explanations in the mediums. I think that if you guys are interested, you can explore more into that. And this is our partners, investors, security firms. We also work with a lot of top tier security firms as well. In terms of DeFi integration, we have a bunch of other DeFi protocols integrate with us. And also, we just launched our dForce Lab at the beginning of this year with a $25 million US dollar capital. In integrating with us. We're happy to provide liquidity and also provide startup capital. We already have backing a number of other DeFi projects this year, and we have provided around 50 million US dollar liquidity across a variety of DeFi protocols that integrate with us. So I think that if any one of the projects that are interested, we're working with us, and we're very, very open to collaboration and partnership. Yes, so I think that's my sharing. So we're happy to answer any question that.
Sure. So thank you, Mindao. That was a fantastic, really great presentation. You laid it out really, really well. I've got some questions, and I'm going to go to the audience. One is, what's missing in the DeFi space right now? Where are the opportunities for somebody that wants to get involved and build out a protocol, or they want to build out something where it's not really there in DeFi, and they can get in early? What's not in the market? Because you seem to have a fairly comprehensive suite of things going on. What's missing at this stage in your?
Yeah, I think the missing part is basically to build a DeFi sort of platform that can interoperate across different public blockchains. I think that the major sort of bottleneck now from DeFi is actually the gas cost. It's just so high. So it's basically priced out all the average sort of users, and it priced out some of the high frequency sort of applications. For example, the only sort of application DeFi that I think can stay on layer one is lending protocol. The reason is because lending is really a very, low frequency transaction. And usually, we look at our lending protocol, typically the borrowing size is like $1 million US or above. So the gas cost isn't really a concern. But we see that there is a lot of DeFi application is basically interfacing with the average Joe users. So I think it's quite important that we can have a sort of DeFi solution that is able to optimize your capital across different layers. It's not just on layer one, but layer two as well. And that's exactly what we're trying to do now, is how we shuttle the capital from layer one to layer two in a more efficient way. So basically, you have a higher yield asset on layer one, but your yield can share across to like Binance Smart Chain or Optimism or off chain. So I think that this missing part is how to really do a shuttle bus service between layer one and layer two and different layer of protocols. And I think that we can see a lot of layer two solution already emerging, but I think that there's no sort of a DeFi protocols servicing this shuttle bus service. I think this is a very critical part of the, I believe, the sort of the composability of DeFi in the future.
Okay, great. Thank you for that answer. We've got a couple of questions. One is CMB International investing only into dForce, or are they also deploying capital into your lending synthetic protocols or yield markets? What type of composition is the $70 million USD AUM of the yield markets? Yeah, so there's a lot there. Let's take the first part. Is CMB International investing only into dForce, or are they also deploying capital into your lending and synthetic protocols?
Yeah, basically they invested in holding our governance token, DF token. So basically the DF token covers all the protocols. We only have one DeFi token, which is DF token, which including our lending protocol, yield markets, and everything. Yeah.
Okay, and then the second part of that question is, what type of composition is the $70 million AUM of the yield markets?
Yeah, it's primarily in the, actually we supported 4 stablecoins. One is USDT, USDC, DAI, and USDX. The majority of them are USDT. I think the reason is because in China, USDT is by far the dominant stablecoins. I think probably in the market, like 80–90% of markets is dominated by USDT. I think this is quite a drastic difference compared with the Western markets, where probably USDC is pretty much like a dominant one. In Asian market and China, USDT is pretty dominant. I think that our composition of the yield market reflect that kind of dynamic as well. Yeah.
Okay, great. One last question, and we're out of time. From Yuna, being based in China, who are you targeting as your customer base? Do you see cross-border finance as being more or less difficult given the uncertainty of different regulatory climates?
Yeah, I think it's an interesting question. Even though we the majority of the team based in China, but basically our capital, our TVL is mostly coming from the other protocols. We don't know where they're coming from. YEarn, YFI integrated with us, Flamingo integrated with us. So we have a bunch of other DeFi protocols integrated with us. We don't know where the actual end users is, but actually in terms of, for example, the user from a lending perspective, we do have a lot of miners, Bitcoin miners and Ethereum miners borrowing on the platform. So those miners are not really sort of handicapped by the regulatory capture because they are borrowing stablecoins, which is not really regulated per se. I think that from a domestic China market perspective, the regulation is mostly on the surveys on the edge of fiat currency. But I think for DeFi, we don't touch fiat currency. It's all about stablecoins. And of course, we're experimenting with, hopefully we will be launching a Chinese yen denominated stablecoin on a synthetic platform, probably in April or May this year. That will be a very interesting experiment because it probably the first time we were able to issue local currency denominated debt instead of just stablecoin US dollar denominated. I think that will be serving that will be able to serve the miners and local sort of customers very well because they want local currency denominated debt and borrowing, so they can mitigate the foreign exchange risk. So I think that we definitely is going to be experiment on those fronts. I would expect quite a strong demand on local currency denominated borrowing in the coming future, and I think that DeFi definitely should bring the solution on the table to serve those customers.
Okay, fantastic. Thank you, Mindao, for that presentation. Look forward to bringing you back for future things and possibly communicating with you about some other things that we're working on. This is probably one of the best presentations we've had. You've laid out some really key concepts and kind of in a very clear way. So we're getting some really positive feedback. Thank you for that.
Yeah, thank you for the invitation as well. Yeah.
Yep. Thank you so much. Okay.